Hello and welcome in this next lecture of this second module called VWAP. VWAP is a very powerful volume tool that will help you with decision making and with identifying great key levels. VWAP, volume weighted average price, is a technical analysis indicator used by traders to determine the true average price of an asset based on both price and volume. Unlike standard moving averages, VWAP gives more weight to price levels with higher volume activity, and that's the major difference between averages, moving averages, and VWAP. VWAP works as some sort of dynamic support/resistance. As I said, VWAP shows the average price of trades weighted by volume over a specific period, most commonly from the start of the day. That's called session, trading session. Now, how VWAP is calculated? It's not average for each candle separately. It's calculated continuously from the start of the session based on volume. Each trade is weighted by how many shares, contracts, were traded. And that's the main core of VWAP. Simply said, large trades have more influence than small ones, and based on that, this line is created. Very important sentence. VWAP is not based on the most traded price of the candle, but on the average of all trades since the start of the period. Key components. Intraday orientation. The standard VWAP is calculated at the beginning of each trading day and tracks price action and volume through that specific session only. Institutional reference point. Major institutions often measure trade quality against VWAP. Purchases below it or sales above it are typically viewed as a favorable execution. Market bias signal. Prices trading above the VWAP generally suggest upward momentum and trend, while prices below it tends to indicate downward pressure. Right here you can see how the price reacted to the VWAP from the previous trading session. In combination with other important key levels, this represents an excellent zone for potential trade execution, in this case long. So that's the theory, and now how we use VWAP. In Lunar, we use VWAP as a tool that determines, first, moment when the price is in a suitable position for buying or selling, or it confirms the zones for buying or selling and for taking profits. When we see that the price has deviated from VWAP and is testing the VWAP from the previous session, there's high probability that it will come back to current session VWAP and test it again. Because in short, when price loses balance, it jumps around and tests fair prices from the past. And those are exactly the moments when we want to be active and monitor the order flow. Another very important sentence, we never rely on VWAP alone. It's always combined with additional confluences such as support and resistance zones, swing points, and other important key levels. For example, here is a situation where there is 4-hour support zone at which the VWAP from the previous session is located. All of this lies below the 15-minute swing low point, making it a great area for liquidity to be taken. The combination of all these confluences gives us an ideal zone for potential long position. Notice how we combine all possible key levels to create a zone with a maximum probability. We recommend watching this part of the lecture after completing Module 3, as we will be working with ADA software here. When it comes to VWAP and its settings, you can enable VWAP on TradingView, but we use ADAS, which is Order Flow Volume Trading Software. So here go to Indicators tab and type VWAP and click the Add Indicator button. When it comes to settings, I'll leave it as it is. Default settings are best, at least for us. VWAP works best on smaller timeframes. We personally use VWAP on 15-minute, 5-minute and a 1-minute timeframe. If the line is blue, it means the price is above the current VWAP. If the line is red, the price is below the current VWAP. So it's a live current VWAP. However, what is more important for us are the VWAPs from previous sessions. If a session closed above the VWAP, the level will appear the next day as a previous VWAP high. If it's closed below the VWAP, it will show up as a previous VWAP low or previous VWAP minimum. These levels works very well as a potential take profit levels or key areas for potential setups. Here we can see that the price has been below the previous VWAP low points for 2 days and has also broken the last volume maximum. So for me, this is strong indication that I would want to short the market somewhere within these zones, with a potential take profit target around the current VWAP. So yeah, this is VWAP and the way we approach this indicator. It works with volume, which allows it to estimate key levels with high accuracy, and it is one of the tools in our arsenal that we cannot go without.